Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. So today we thought we'd talk about a couple of different items. First, go through kind of the general what's going on in the market right now, touch base on how our models are positioned, and finally discuss a little bit what our plans are for the rest of the year. So as it applies to the market, not a lot has changed since the last video. Volatility still is high. That volatility can be either intraday, meaning that it opens up very strong and then a tweet comes out or a news story comes out and all of a sudden the market finishes very low, or it could be just day by day. One day is way up, the next day it's way down. So although October month to date has been a fairly strong month, especially compared to September, which was quite weak, we do anticipate this volatility to continue definitely for the next few weeks into the election, and then depending on the resolution of the election, the volatility will continue or it'll settle down. Now, when I say resolution of the election, it's less about whether Trump gets in or whether Biden gets in, and whether the Senate is a Democratic Senate or a Republican Senate. It's more along the lines of, is the election going to be contested? Is it so close that we have a kind of a redo of year 2000 where it has to go to the Supreme Court? Markets hate uncertainty, and so whether Biden blows out Trump or Trump blows out Biden, I think a lot of people would be happier with that than this weeks upon weeks of uncertainty over the next month or so. But again, that's out of our control, and we'll have to see. Just like the COVID and pandemic and second waves or outbreaks are outside of our control for the most part. And so we'll have to see what happens there and what the effects are on the economy. The economy still looks quite weak, but the stock market still seems to be quite resilient. And so when we look going forward, we like I said, continue to see the volatility. We continue to see there not being a great risk reward at this point for loading up on equities or stocks. Yes, the stock market could continue to do very well, but it also may turn out that there could be some bumps and some significant bumps in the road, depending on what happens with a bunch of different factors over the next few months. So until we have that stability, our preference is to stay relatively underexposed to equities. And what you'll find when we do our reviews is that really hasn't hurt clients. For the most part, people have been able to achieve a small reduction in their returns relative to all stocks in exchange for being very low into stocks. So that's been really good over the last little bit. As it applies to our analysis on the funds and the managers that we use, we just finished our analysis on the yield bucket over the last month, and we've been communicating that to you and making tweaks where necessary. We're about to start on the market and defense bucket and communicating that out probably starting next week after. And the focus there is going to be, as I've mentioned before, looking at managers that may or may not have done a good job during this downturn, but just became a little bit more conservative when we were already conservative. So it became conservative on conservative. And so when we're looking at managers that have done a good job, you may find that some of those managers we're going to switch out to other managers, even if they have done a good job, simply because they became very conservative during the downturn. And like I said, it became conservative on conservative. So we'll communicate that over the next little bit. There'll be a few changes, but overall, we don't anticipate, unless there's a market change, we don't anticipate a big increase or decrease to any of the three buckets. In other words, yield, defense, and market will all be within the same range of exposure that we've had for the last few months. So one of the things I wanted to just quickly mention when we're looking at these managers in the market bucket is the idea behind upside capture and downside capture. That's a really important number for us. So upside capture is basically the chance or the return that the manager achieved in relation to their market. So for example, if a manager is invested in the S&P 500, the US stock market, and they have a 10% return for a year, and the stock market was up 10% for the year, they would have had 100% upside capture. So they captured 100% of the upside of the market. Our focus now going forward is going to be to find managers, and a lot of the managers you have already do this, but find managers that actually achieve 100 to 120% of the upside and participate in about 90% of the downside. The idea being that when it's time to invest in the equity or market bucket, we want managers who are going to perform. And we will worry about how much exposure we have into stocks. Over the last 5 years, we've been quite successful at doing that. And I think that that's something going forward we're really going to concentrate on. So like I said, everybody's, of course, model is individual. So we're going to communicate person by person over the next little bit. And hopefully by year end, we'll be able to have everything cleaned up. As it applies to year end, we're focused or starting to be focused on planning for any of the year end activities. So as you know, or as a lot of you know, every year in November, we look at the gains and losses in all your portfolios to determine whether there's any reason to sell or to exit positions for a tax reason, and make sure that you're limiting or reducing the amount of tax that's payable to you. We would say that this year is going to be quite bumpy because there's been a lot of managers who have been quite active. So you could see some pretty good capital gains in some of these manager portfolios. But there could be, because the markets were down in March, there could be some negative returns as well for some of those managers. So it's going to be more important this year than ever to make sure the managers have an idea on how much gains or losses they have, so that we can incorporate that into your tax plan when we talk to you about it in, like I said, end of November, early December. And then as well, we'll want to make sure that, you know, we've maximized tax-free savings accounts and our ESPs and RSPs, all the normal year-end stuff that we go through at our year-end review. And so we want to continue to be proactive in making sure that everybody is set up on an income basis properly or on a tax basis properly. I hate surprises. I'm sure you do too. So we want to do as much planning as possible to ensure that the tax planning and the investment planning is done before year end. As always, if you do have any questions or any concerns, please do reach out to Jim and myself, or obviously Angela and Heng-Yi, to make sure that we're all, that we can answer any of your questions or alleviate any of your concerns. As well, if you would like to pass along these videos that we post from time to time, please feel free. We are definitely open for business as it applies to referrals. As you know, and as we've communicated, we want to do a good job for everyone. So we aren't going to add 100 new clients in a year and have service levels drop. We're going to be very selective in the number and the type of individual family that we add. But we are definitely interested in whether it be having a conversation over the phone or grabbing a coffee with someone to chat about their investments. One of the things we've seen is that some advisors have maybe not had a great year, and so there's potential for a really good deep look as to how the performance has been and how the service levels have been over this very, very challenging 2020. As well, feel free to reach out through our website at starrattwealth.com. All of our videos are on there, as well as just some general details about the team and our methodology and things like that. But really, it's a conversation that's probably better to have face to face or over the phone. So that's all I have for now. Hope to talk to you again probably right after the election, once we have some knowledge as far as which way it's going to go, and give some ideas as to what's going on there. I mean, I'm not going to guess on who's going to win, and I'm definitely not going to guess on the what's going to happen to the stock market. I remember a lot of people back in 2016 when Trump got elected thought that was it. The world's going to end and the stock market's going to plummet. And in fact, it was the opposite for the last few years until the pandemic hit. And so I'm not going to guess about that, but we are definitely going to react and plan accordingly to ensure that everyone is safe and everybody's portfolios are set up so that they can deal with whatever the markets or the world throws at us.